Hello, hello. How's everyone doing today? Welcome to Al Stock Trades. If you're just tuning in for the first time, we like to take Warren Buffett type investing and find disruptive tech thesis like Kathy Wood's investment, but actually do an intrinsic value calculation and find the value of stocks. Okay. So in this video, we're going to go ahead and do a fundamental analysis and technical analysis. And by the time you walk away from this PayPal video, you're going to understand how much a stock is worth. What are the support and resistance levels? And there's going to be a lot of things that you're going to learn. So first things first, we created this proprietary software where it's been directly injected in our Discord called Brain Machine. And one of our members yesterday at 2:03, right around here, put in Al, my name, /DCF, which stands for discounted cash flow, PayPal, PYPL, and then my brain machine, again here at alstocktrades.com, it returned the stock price at whatever it's currently trading at, and then the discounted cash flow statement of the which is $86.98. Now, beautiful part about this is this alters based off of the beta of the stock market, so it's constantly changing. So once you put that in, within a couple minutes, or an hour, a couple hours, the stock price ascended to its intrinsic value because they just reported, and it hit up to $86. However, if you were to, let's say, for example, let's go here, and that's the beautiful part about Brain Machine is all you got to do. These are all of our clients coming in and working hard and doing the discounted cash flow statements and all the other things that we offer here at Al Stock Trades. But if we do the Al PYPL for the discounted cash flow stock, which you get now, I actually said it wrong. It's Al, just on my own commands here. Al DCF, you get now you're getting $96. So now it's trading at $92, and then here it's trading at 96. So as the stock market increases its beta, the intrinsic value calculation takes that into effect, takes in all of the data from Wall Street and implements it within here. And it's a great way to have a generic DCF that allows you to understand what the price is. So it's a really great tool we have. In fact, here, let's go ahead and look at the PayPal stock. And this is available in our Discord. We've injected it in here. Think of it as a software app. That's exactly what it is. And it called it out. Well, it's been calling it out, but it's called it out right around yesterday at $82. And here it is with a nice good old gain here. You would be up more than 11%, which is honestly great. So there's that. If you want access to it, we do offer a 3-day free trial at All Stock Alerts, and the data speaks for itself. We offer artificial intelligence technology, and we also do top short squeeze stocks and so much more. So if you want that, they'll be linked down below. So now we're going to switch gears and talk about the intrinsic value calculation for the PayPal stock based on our Mastering Stock Market course, which has our intrinsic value. By doing this, we manually input it, which means that we have a little bit more control over it. And by doing that, we got to go into the PayPal financials and take a look at what's going on. So what we're going to be doing is PayPal got sold off right around the 2015, 2016 mark. So we're going to be looking at PayPal, I believe, on the 2017 mark, which was right around either 2016 to 2017. So we'll do 2017. And we're going to take the data from all the way here to there, and we're going to look at the net income increase, and then we're going to go ahead and take a look at the free cash flow increase as well. Now, since it's free cash flow positive and everything, we could extend it out to 10 years, and we're going to look at all those things. But just in case that people don't understand where we're getting these numbers from, we're getting it from here. Okay, so let's get straight to work and let's put in the value of PayPal. So I'm going to just have it placed on the side of my screen here so I don't have to flip back and forth. And to all our Mastering Stock Market students, I highly recommend having a dual screen. I have a triple. It really does make the workflow a lot easier. So if we go here and go to 2017, they made about $1.79 billion. Again, these numbers are in millions. In 2021, they walked away with a net income of 4,169. So they're doing about 23%. So in terms of free cash flow, like I said, we're going to start at 2017. So let me just reiterate 2017. The free cash flow is here. and we're going to go ahead and go all the way down, here, and then we're going to take this number, all the way up to 2021. All right, let's do it. So it doesn't matter what year you place it on here. Doesn't matter. You could just basically place it anytime, anywhere you want, as it just takes the average, as you can see, the average FCF. All right, so let's do it. 1864 460 3857 4988 5432. Okay. So now that we have that, as you can see, the calculator goes 10 years into the future, discounts back at a 10 to 15% discount rate, utilizing a 2% perpetuity model. Now all we have to do is divide by the number of outstanding shares, and then the number of outstanding shares is this particular uh, number here. So all you got to do is just literally put that in there. It's 1186, and then you get the intrinsic value calculation of the PayPal stock. Now, if you want to be a complete bear, and it's not honestly fair for at Rhymes, it's not honestly fair for PayPal to say you used 4 years of data, considering it's actually net income has grown over the years. I mean, we could do 778 for 12 to see the value here. Oop, 2012. On 21%. So it's around the same thing. I like to just take 2017 because you really can't evaluate it when it was bought out by eBay. So that's why we use the 2017 numbers. But let me just go back in here. I just wanted to just do that really quickly. You got to, when you evaluate a company, you got to understand each company's story. Each company is different. They have their own story. It's not just plug and chug, right? So they're going around 23%. And just curious, if we end up going to Yahoo Finance here, I'm just curious to see what analysts think these guys are going to grow. I mean, they're saying on their earnings here, they're expected their forecast to be 11 to 13% from last year. But let's see if they updated their forecasts here for their analysts. So they're coming in at a 15 to 19%. So yeah, so this is based off of PayPal with all the investments they're making, that all those things they're doing with Amazon, this is what we could get here. So if you look at the stock price here, the bear case is $108. The base case is 146, and the bull is 211. Now I'm I'm more of a value investor. So what I like to do is so when I first made this video, I made it back a couple months ago, and I had a lot of people saying, "Oh, you didn't use a WACC model." And for people that don't know what that is, it's a different discount rate. So they call it the WACC, right? So it's the weighted average cost of capital. If you guys want to learn about it, it's all here. The numbers are here, and you could just kind of understand how it works, right? But personally, for me, I don't like to use that. It does come, I guess, a little bit more accurate, right? But honestly, if I was an internal company, I would want to use this for like an acquisition. I like to be extremely just basic off of my intrinsic, not basic, but more off of I'm rough. Sounds wrong, right? I'm very conservative. Okay. I like to cap it out, and I'm looking at this. If the stock price is not below this, I'm not buying. Okay. So when I placed this, I got a lot of people, especially people that do their own intrinsic value. They're like, no, you're not supposed to do this. And I was like, yeah, we're headed to a slowdown in the economy. Yeah, I'm going to end up doing that. And then they end up getting really upset. But look at the price now. So what you can do is you take 108, which is the bear case of the price. And if you do 108 and you multiply it with a 20% margin of safety, you just take 20% times 108, you get 2160. So now what you do is you take 108 minus 2160 and you get $86.84. So at that point, a value investor would be like, oh my God, first off, that's the bear case, and it's 20% margin of safety on top of the freaking bear case. And if you go to the PayPal stock, its 52-week low is 82. So honestly, like that's the beautiful part about value investing is, so if you would have bought at, let's say 86, who cares if it goes to 82, whoop-de-woo, you would go ahead and dollar cost average, right? And you would ascend to its value. Now, if you look at its value here, I would say 150-ish. I'm curious because it's been a while since I've looked at PayPal in terms of our channel. But if you go to price targets on our Discord, again, you guys can have access with a 3-day free trial, 3-day. You can look up PYPL here and see where it's at. So yeah, 131. So the numbers have changed because the revenue has decreased, but my price target's at 185 here. So I would say I guess I downgrade PayPal, and I would do it around $150. So from 185, we'll do 150. So, but still, I mean that's easy money compared to what it's trading at now. So there's the long-term price, not long-term, but that's the value of the company right now. Okay. And if you want to look at 150 for PayPal, let's see when it even traded at that. Yeah. So remember when the pandemic happened? Before the pandemic happened on February 14, PayPal was $122. Well, it was doing great, right? My calculation, 150. Let's do it. It's and then all of a sudden the pandemic happened, everything started closing down, and then the economy, everyone's Federal Reserve started printing all this money, and it just blasted through the base case, blasted through the bull case, and started trading at values that are just so stupid. I mean, freaking people were so euphoric here, and they are holding bags as tight bags. We're talking really, really hard bags here, and then now it's coming back down to reality. Can you use it for dividend paying stocks too? Absolutely. So, for this particular, what you want to do is you want to go down here, and we have the book value calculator, and we will be talking about this book value calculator. But as you can see, if you zoom in here, we have a 10-year dividend history, right? And it's great to evaluate dividend stocks from here as well. And also, we got to use a 10-year federal note. We'll explain all that, what that means, right? But there's another calculator for that. And you can also use it for this here as well. The story gets a little bit more complicated, but as you can see, we got you covered on every little stock that exists within the market, except Bitcoin. I don't know how to value Bitcoin based off of just it being a legal tender, maybe replacing gold. It's hard to value commodities. That's why I like stocks. It's a business. It has numbers. That's the only weakness about a discounted cash flow. Because remember, the business has to, generate a cash flow, which obviously PayPal has no problem in doing. In fact, when Elon Musk, if you go down here, you'll go to the founders, Elon Musk and Peter Thiel. If you go to Peter Thiel, he wrote a book called 0 to 1, which is this book here. I highly recommend people buy it. I can put an affiliated link down below if you guys need it. But this book here, he actually searched the book. Let's actually talk about PayPal. Yeah, I remember he was talking about PayPal, saying how he did a discounted statement of cash, discounted cash flows back in 2005, 2006 to find the value of what it would be right now. So hopefully we can, for PayPal to work, we needed. Let's take a look at the book here. It can't really it doesn't show you that he had a diagram of his cash flow. It just shows you how the wealthy, he's a billionaire, right? He's the co-founder of Palantir. It just shows you how the rich do business. So here it is. Here it is. Are you ready for this? So it doesn't show you the whole script, but he said future cash flows of 46, PayPal, all these things. It's this page here, 207. And he talks about the free cash flow of him measuring it. So essentially what we're doing now and what we're doing now in 2022, we're going all the way up to 2032. He was doing it also in 2010, in 2008, and going all the way to 2018, 2020. Like literally 10, 12 years ago. You know what I mean? You see how freaking cool that is? I don't know. I'm a nerd. I think this is really cool, but it just shows you that this is how the wealthy evaluate. And sadly, here's PayPal and Palantir. Again, no one really knew about Palantir. This book was written in 2014. Everyone's jumping on Palantir. I've studied Palantir a long time ago, right? So it's something that I wish our high schools taught. You know what I mean? It's a weakness in our It's almost like they want you poor. This book was 2014. And also, shout out to Blake Masters. Shout out to this guy here. He's running for senator for our great state of Arizona in Tucson, my state. Yeah, let's see what happens. All right. So let's go here. What about Baba? Eldad, how are you doing? What about Baba? Well, Baba is a Chinese stock. The problem with Chinese stocks is they're invested with the Cayman Islands. We could do another video on that. Are you part of the Mastering Stock Market course? I forget. You would have to convert the Xian, whatever the money, the yen, whatever they use, over to the USD. And then from there, you would want to take a discount rate of 25 to 40% because it is China, rather than the 15 to 20%, 10 to 20%, because you got to put in a lot of risk for Chinese stocks. If Baba was trading if Baba was a United States company, it would not be at these prices, guys. It would not, for a company that makes 17, almost a trillion, like $700 billion in revenue, having a $247 billion market cap. Yes, unrealistic. Hey, okay, Milord, thank you. I just forget. It's been a while. It's been a while since you've been on, so it's glad to see you again. Forgot your name. From the war. There it is. There it is. Sorry about that. I'm not really much of a PC player. I know World War. I'm more Halo, Call of Duty, but I like Halo, but Call of Duty too. But I'm a Halo guy. So that I slowed it down. I was hoping that you would watch this. That's perfect. You're here. So that's kind of a way to do it. But this is PayPal. Now, just as promised, just really quickly for people that have not done this, maybe you haven't done this, Eldad. For people that are here, thank you, Mumu. Mumu. I have a dog I want to name Mumu. The Coco. I was actually going to change her name probably to Mumu because she looks like a cow. More so than Mumu himself. But Mumu has this thing where let me just show you. I break it down really quickly. If you open up a Mumu trading account, you get one free, only one. If you put in 100, you get another one. So that's 2 free stocks. If you put in 2,000 or more, that's another 3. So that's 4 free stocks. I'm sorry, I can't add. 3 plus 1 plus 1 is 5 free stocks. But then guess what? There's more. If you deposit 5,000 or more and take a fun, hard trading quiz, and again, if you guys need help, comment down below. And also, if you're in the private Discord channel, we got you. You know what I mean? I think Mumu won't get mad at me, right? Because, we're all about community here. And that's the whole thing about, we'll help you out on the quiz. So then we can get you a free Apple stock, literally. A free Apple stock. That's like free money, guys, on top of the other 5 freaking stocks that you're going to get, valued up to like, I think like almost like $15,000 to $17,000. So this is literally easy money, free money. Take advantage of it. I put it in the link down below in the description box. And I'm so adamant about supporting this company because the reason why I like this company, here's the link here, is because they offer free level 2 data. Okay. So Robinhood charges $5 a month for that. I think Webull charges $5 a month or whatever for that. Okay. They offer short selling data as well as a whole slew of things with education and tutorials. So Mumu, you are very cool. Okay. DWAC is squeezing after hours. So now switching gears from Mumu, let's go down here really quickly to our AI. I'm actually really curious. I don't think, what are you going to calculate DCF for DWAC? I don't even think we can get a calculation. Yeah, it won't spit out a calculation. It's like, I don't know. It's like, you know what I mean? There's no revenue, so it makes sense why it's doing that. So let's look at DWAC right now. You said it's squeezing. And this is a PayPal video, so I want to make sure. Oh yeah, look at that. That's nice. And for people, for our top short squeeze stocks and short squeeze and all that, what's cool about having access to our Discord is you have so much technology here that you can look at DWAC on the minute chart. And you can essentially see the support and resistance levels here. And you see how it crossed the support and this level here at 56. Then you want to go to the hour here. or not the hour, the actually the hour. Sorry, that's the wrong one. My humblest apologies. The hour, then you want to go to the week, then you want to go to the day. I think I put them too fast. Let's see here. We got to give it some time here. There it is. It's all coming in. It's all coming in. Oh boy. So here's the hour. So as you can see, there's the hour. We need a little bit more data here to see what the support and resistance lines would be. Where's the week? Look at the day. Definitely, I overloaded it. So there it is. There's the day. So the day hasn't registered. Let's look at the week. So what was? So we were at like 47 bucks. Yeah, so the best one would be the first one, the minute. As you can see, we went right here, 47 to here. So if you have access to our support and resistance lines, you would have known to get out. I would have honestly gone out at 56. 56, I would be out. So let's go back to the price here. Yeah, so right around here, you go ahead and take profits, but you could use your Weeble or simple moving average and utilize both the AI and this to plant your own support lines. In fact, what you can do is you can go to TradeMaster and you could go to, I believe, stock charts and you go to the pin. And then you could look up the Fibonacci for DWAC to honestly see what would be a great place to get the hell out. And the Fib would be, yeah, right around here. That would be here. So it went from this Fib here, 47-ish, like we said, to that Fib right here, which was 59. And if you go back to WAC, what does that tell you? What does that tell you about our private Discord? We have guys, we have such a great program here. Okay, $60, and you would have been able to just get the hell out of there. There's $60 right there. So there's your DWAC. But again, for PayPal, as I promised, let me go back to PayPal really quickly. Let's make sure we do the support and resistance for PayPal. So PayPal, these are the support and resistance lines. I'm just going to do the minute because there's a lot here and it's going to take some time. But we don't know if we're at a bottom. The AII sentiment, we haven't been at this bottom for a while, so we could be next to one. It depends if GDP slows down and there's a recession. That's going to be tumultuous. But we know that the faster we get in it, the faster we would get out. So we got a $90 resistance and a 95, almost 96 bucks and 104. And if you go to our BCF for PayPal and our brain machine, we have 96. So it's good, like nice day trade right there, 90 or swing trade. And I'm not really going to do a lot of the AI for PayPal. If you guys are interested in wanting that, we can do it with the dark pool data to see who's buying. But we can look at what our AI says. I think it's a great swing trade. Yeah, so PayPal is a combined, it's positive. Options, intraday is great. Movement in this, it's a great swing trade. Okay, let's go ahead and do this and we'll cap off the video. So it usually, I'll take a look at that. How do you know your calculator is correct though? Is it always based on FCF? If interest rates change, it will screw everything up. Well, here's the thing. Regardless of what interest rates are, regardless of what a lot of these components are, what you're doing is you're going in perpetuity to 2%, and you're finding the value of the business. Now, later on, if, for example, the inflation does increase, then you would just change the perpetuity model. right? I'm keeping it at 2 because that's the target cap that the feds want. But as you can see, the higher it is, let's say we use 5%, look at the stock price. The stock price, oops, 5%, the stock price would go up. Why? Because of chapter 2 of the intelligent investor, stocks versus bonds, right? Inflation actually is more good for stocks because they have pricing power. So it's a it's definitely take it as a grain of salt. However, it is highly accurate. But again, it's an educational tool. It's not a something that you would base a financial decision on. It would just it allows you to increase your probability to understanding the value of the business, regardless of what interest rates are or whatnot. They will be reflected within inside the free cash flow because you would see the companies stop making money because its economic activities have been affected by, let's say, the changes in those things. Now, that's how you would gear up the uh, um, economic activities with the interest rates. Now, our book value calculator has the 10-year federal note, which is the 10-year treasury, right? So there's that right there. Um, are those green lines levels? Are you talking about the fib, the Fibonacci? Where is that? You're talking about this guy here? Yeah. So this is a very sophisticated way. I mean, this is like a next level. There's also the fanning method. We'll talk about it in our mastering course here. But these are nice levels to kind of get you in and out because it's almost like a self-fulfilling prophecy. If you can be better than 99% of day traders, honestly, just 90%, you would beat everybody, right? Right. But we like to strive for the best, 99. But if you can do 90, you'll be good to go. Yeah, these are levels, right? Fibonacci, it's a sequence that the world is dominated on, kind of like the power law. So if you look up the power law, I'm going to get into math here. So if you guys want to hang off, you can guys go off right away. So the power law dictates the way the universe works and the whole statistical relationships. The power law is a function of how the world works. The world is mathematical, which goes into Elon Musk's level of like maybe this is a simulation, because you can find the power law in astronomy, criminology, physics, psychology, biology, and also mathematics. And here, guess what? You can find in economics, in finances, such as the Fibonacci sequence for the stocks. So again, this shit gets really complicated. I don't want to overburden you guys, but if you guys are interested, we can break down the math. The math is pretty complicated. I took up to differential equations, so I kind of like I know this stuff. So the whole integration, integrals, and whatnot. But the p as a function of x, or all this stuff. So, but we don't want to bore people here. But if you guys are interested within our mathematically inclined Discord, where you can look at anything you want, literally, which is like super undervalued on purpose. You can go ahead and get a 3-day free trial. We do offer top short squeeze stocks and top gamma squeeze stocks. Here's the gamma. We literally are continuing to innovate each and every day. We get heat maps on demand. Here's the top gamma squeeze stocks here. There's your gamma Miami, and then you can go. You have your 3-day free trial, and here are the testimonials, and the product speaks for itself. So there you have it, folks. I hope to see you on Discord. It's literally 3-day free trial. Enjoy it, non-throttled. You can do what the hell you want. Enjoy it, and it'll be How do you enter a negative free cash flow? So very simple. For PayPal, well, they don't have a negative free cash flow, but I did show you on the where is this on questions. I did I? No, I didn't show you here. I showed me Lord on how it's done. So very simple. Oh nope, that's not mine. It is right here. You just literally enter the negative here. That's it. And that kind of gives you an analysis right there. So that's how you do it. Well, it's how the economy works, but in stocks tend to do better than bonds during inflation because pricing power. There's a lot of other uncertainties too, such as like the Russian and Ukraine war, and Putin pretty much dropping the nuke bomb every freaking like 5 minutes. Like, oh, I'm gonna nuke if you don't do this. Oh, I'm gonna nuke. He's honestly really annoying me right now with all the freaking nukes. Yeah, here's the figure, and he got it right here, right around this line here, the 59. See, and that's how you do it. Yeah, that one is pretty good. Drew the fib nicely. Exactly. So yeah, you took some courses before that charged so much freaking money. God, they charge a lot of money, like $300 a month, 400. Yeah, and we have our technology that draws it for you. So again, we want to give you guys value. It's you know, how do you democratize financial information when the shit's so expensive, right? So, um, oh yeah, I believe it is way higher. Oh yeah, oh yeah, and not just that. Look at rent. Rent prices are high too. They haven't been factored in because Lord knows the government doesn't want to use recent data. He's saying if the stock has no positive free cash flow, like you would take 5%. So I recommend watching the video for Clover Health. I explained it really well. So watch that video. Yeah, you paid a lot for that and it sucks. And it's I mean, yeah, I guess it's a form of service. Maybe because I'm going into healthcare, this is not my main bread and butter. I mean, if I was living off of like that's why I'm investing a lot into this. I'm not really using the money for myself. I mean, maybe I may get me this. I got this microphone for. I guess I'm using it for my education as well. But it's everything that I'm spending is on the business. But maybe if I was living off of this money, then perhaps I would increase prices to like crazy levels in order to eat. But I'm going into healthcare, so this is like a hobby. This is just to sustain the business so we can keep growing. So it makes sense. But will it do fib expansions? So we are working on that. There are some different protocols to do those things, but regardless, we're going to go into teaching the fan methods and all these different types of ones. So and if it doesn't, don't worry, I will program it, and I'll program one in the brain machine to make it do that. So it's all about it can be done, but the calculation though, this intrinsic value calculation sadly is a tough one. This one, you can't tell a machine, oh, don't do this for this. You can, but how much assumptions can you do? It's going to take years for me to program this. But by then, this course would go to this intrinsic value of $2,000. As of now, it's essentially more than 50% off. And it includes the lifetime to Al stock alerts, which you can see here. And the subscription services that we offer lifetime here. But if you guys just want a 3-day free trial for people that are watching, literally all you got to do is click here, 3-day, and you are good to go in here if you want to read more about what we offer here. Okay. We offer a lot, so much. It's just so much. Anywho, it's a privilege and honor. And I'll see you guys on the next one. Peace.